Welcome back to the morning show here on Arise News. The National Economic Council recently voted an additional $250 million to the Nigerian Sovereign Investment Authority. The fresh capital brings the total Nigeria's sovereign wealth fund under management by the Sovereign Investment Authority to $1.75 billion as of date. The approval was given at the 5th Governing Council meeting of the Nigerian Sovereign Investment Authority. During the meeting, the 2018 annual report and accounts of the NSIA were presented and approved, after which members of the National Economic Council unanimously voted for the injection of an additional $250 million in core capital to the authority. Joining us now from our Arise Abuja studio to discuss this and other issues is Uchechi Orji, Chief Executive of the Nigerian Sovereign Investment Authority. Good morning, Uchechi Orji. Welcome to the morning show.
Good morning.
Good morning.
Good morning. Thanks for having me.
Yeah, and thank you too for honoring our invitation. What is the status of Nigeria's sovereign wealth fund at this moment?
So the status, so let me start by answering that by referencing the recent injection of capital by the National Economic Council, who represents the shareholders of the Nigeria Sovereign Investment Authority. The total government contribution now into core equity is $1.75 billion. So from the beginning, it was initial $1 billion. Then in 2016 and 2017, there was an injection of $250 million each. And now there's a new injection of another $250 million. During the National Economic Council meeting, we reported 6 straight years of profitability. Incidentally, this year's annual meeting was delayed for many reasons, given that we had published our accounts as far back as May, but which was an opportunity to meet with the shareholders and go through the investments made, the profit made, the plans for the organization, particularly as we start to focus on infrastructure. One of the things we also told the council was we have changed our asset allocation model. It used to be 20% for the stabilization fund, 40% for the future generations fund, and 40% for the Nigeria infrastructure fund. What we said to the council was that for new capital now being injected, the allocation formula will move from 20% to 20% stabilization fund, 30% future generations fund, and 50% Nigeria infrastructure fund. This now reflects the focus on domestic infrastructure investments for the Nigeria Sovereign Investment Authority.
Okay.
Now, in addition to the core capital that we're managing, there are also other pools of capital we manage for the government, including the Presidential Infrastructure Development Fund, as well as monies we manage for both the DMO and the federal government in other pools of capital. So far, so good. It's been 6 years of profit, and we're excited for the future and very grateful to the shareholders for the new injection of capital.
Well, when you talk about the fund, how much is from the federal government? How much is from the states or other stakeholders? Is it possible for us to put a figure to that?
On average, the percentages vary depending on the source of the capital, right? So the initial capital was 52% federal government, 48% to states and local governments. And that depends on whether it came from SS crude account or whether it came from things like NLNG dividend, from which we've also received capital. The difference being that there is no derivation. So when it's from a different source of capital as voted by the shareholders, the ratio can swing between 52-48 in favor of federal government, or the opposite, which is about 48-52 in favor of the state government. So the numbers are roughly, if you want to say 52% federal government, 48% state and local governments. That seems to be the core base of the numbers.
Okay, and what would you say drove this decision by the NSIA to change the percentage formula in terms of the sharing from 40-40 with regards to the future generation and infrastructure funds to 50% for infrastructure and 30% for future generations? And I ask this because we're living in times where so much emphasis, even though, yes, of course, we do know how big a deal infrastructure is, but so much emphasis is also put on human development, which falls into future generations, education, healthcare, etc. Correct me if I'm wrong. So what exactly drove this switch in the sharing formula? And what can we expect to now come out of the Future Generations Fund?
So the switch is driven by the fact that we see the following three things. We see opportunities to invest in domestic infrastructure, and that is quite widespread in terms of the definition. One of the areas that we refer to is the social infrastructure like healthcare. We invest in healthcare. We invested in an education company. We also invested in agriculture, toll roads, power, and gas industrialization. These are the 5 key areas that we at the moment focus on: agriculture, healthcare, toll roads, power, and gas industrialization. Now, we've also made some direct investments in things like education, like you rightly mentioned. The truth about it is, our definition of what helps the future generation is aided by today's infrastructure. So we must invest in today's infrastructure as well. And this is driven by the needs that we see, the opportunities that we see, and what we believe will be avenue to earn a sustainable balance between commercial returns and social impact. So I'll give you an example: healthcare. We've been very active in healthcare. In 2019, we built 3 healthcare facilities, one of which is already running, which is the Cancer Treatment Center, which we built as a public-private partnership with Lagos University Teaching Hospital. That is operational at the moment, and we're actually in the process of expanding that. In a week or two, we'll be commissioning the training center attached to that, where we're going to train cancer professionals, therapists, and oncologists, and people that are going to help in building that out. We also have a radiologic diagnostic center in Kano, which is currently being trial run, should be operational in a month's time. And at the same time, we have one in Umuahia. Now, we have about 10 more of this type of projects we want to invest in healthcare. Healthcare is a very important area of focus for us. And this is reflecting the fact that over $1 billion, as far back in 2008, was reported has been spent by Nigeria on external healthcare tourism. So these are areas we want to invest in. Agriculture, we created a co-investment fund in agriculture, which at the moment is made a first investment, and we have 4 investments in the pipeline for investment in that area. What is not also said is, as managers of the Presidential Infrastructure Development Fund, we are also responsible for raising and funding Second Niger Bridge, Lagos Ibadan Expressway, and Abuja Kano Highway. These are all key areas that we're interested in. So the switch is driven by current needs, without which you probably will not be in a position to prepare for the future generation. The savings fund in itself is doing extremely well. I mean, that has been an area where we are very confident and hopeful that we'll continue to generate real profits for the future generations. But the two, quite frankly, cannot be entirely separated. If you don't address current generation, you probably will be struggling to address future generations. The two are not completely separated. So this reallocation allows us to address what I also call social infrastructure, like I mentioned, healthcare in particular, which is not just for now, but also for the future.
Well, let's talk a little bit about the $250 million that has been approved by the National Economic Council. When do you expect it? And when you get it, what do you plan to do with it?
Very good question. The timing tends to lag a little bit. I expect it, within the next perhaps 3 months. I don't know for sure. Sometimes it can come immediately, but there's a whole process that goes behind between the announcement of the allocation and actually making the transfer. So we've been through this several times in the past. I'm speaking from past experience. The documentation process takes a little bit of time. We have to issue certificates. So all of that are all very important processes that need to be undertaken. So there's a whole back office that kicks into action before we can get those funds. So I expect it soon. But I think that it is only fair to say it takes us usually about a quarter to finish all the documentation. What we intend to do with it, this is, again, half of that will be in infrastructure, and again, in these 5 key areas. I'll give an example of an area where we're very active at the moment: gas industrialization. For us, there are 3 things that drive our interest in gas industrialization. 1 is climate change. 2 is conversion of a wasted product into something that's economically viable and useful for the country. And then 3 is actually areas where we see opportunity for balance of trade. So I'll give you examples. Many of you know that over the last, since 2017, we'll be managing the Presidential Fertilizer Initiative. As an offshoot of that initiative, we ended up in a relationship with OCP of Morocco, where we said, look, we flare gas in Nigeria. Why don't we produce ammonia for your offtake, which really is one of the big things OCP buys to help make their phosphate fertilizer products. So we've gone into a joint venture, and we're developing this project where we're taking gas and creating this basic chemical platform that actually just make ammonia for offtake by OCP. That is one of the projects in gas industrialization. The other project you've heard us announce that we're really working hard at is gas flare reduction. Gas flare reduction, where we're taking a gas flare site and turning that into LPG for domestic use and also for export. So gas industrialization is an area, and there are many, many other things that are popping up in that area that we are looking to focus on. So that's one. Agriculture, like I said, we have about 4 projects in the pipeline across various parts of the country. Only one has been concluded, the one in Nasarawa State. But we have projects in pipeline in Edo State, in Imo State, in Kaduna State, and a few other areas that we continue to look at. Now, let me switch a little bit to also what we are doing. Like I said, healthcare, and I keep talking about healthcare partly because that's very topical. And for us, the biggest excitement in healthcare is being able to actually provide quality healthcare solutions, particularly in areas like cancer. We're also looking at pharmaceuticals as an area for investment in healthcare. We're looking at, and we're also looking at not just centers for cancer, we're also looking at nephrology, we're looking at cardiology. So these are some of the areas that span the 10 projects in our pipeline for healthcare. So it's going to be quite exciting. But the most important thing, though, and I haven't mentioned this earlier, is that we intend to leverage these funds. Here's what I mean. We intend to create co-investment funds and bring other people to partner with us. The objective we set for ourselves is for every $1 we spend in infrastructure, we can leverage 3 to 4 times other people's co-investment. So in 2020, you're going to see our theme for 2020 as NSI is growth through co-investments and partnerships. And so you're going to see us looking to create co-investment funds with other sovereign wealth funds, DFIs, to ensure that we make these funds go much further than it really looks. So these 5 key areas are going to be very interesting for us in infrastructure. And of course, the other half will be split between Stabilization Fund and Future Generations Fund. So I'm quite excited about the possibilities we can create by driving co-investments with our foreign partners.
That is great news. We're just going to go on a very quick commercial break. And when we come back, I'm going to bring you up more on this 2020 theme of co-investments and also what has been done with past generated revenue as well. Do stay with us. We'll be right back in just a moment. Welcome back. You're still watching The Morning Show here on Arise News, and we still have Mr. Uche Orji, the Chief Executive of the Nigerian Sovereign Investment Authority, with us in our Abuja studios. Thank you for staying with us on the program, sir. Now, before we went on a break, you spoke about the theme for 2020, which I will go into with you. But I also wanted to ask you what the major investment contributions were to the 68.3 billion naira that has also been generated in revenue through these investments. And then with regards to your 2020 theme of growth for co-investments, let's break it down a bit and start with the very basics. What are the general benefits of co-investments?
Okay, so let's start with the earnings that's been generated. You're, adding up 2018 profits and the first half of 2019. So 2018 was 44 billion naira, and 2019 first half of the year is 24 billion naira. And the earnings are not always straight line because we make investments in everything from public equities in developed markets and emerging markets, private equity. We also make investments with hedge funds, which have done quite well for us this year. These are international hedge funds that do everything from global macro funds all the way to long-short equity. And we're also investing in alternative assets. And this includes everything from commodity funds, real estate funds, equity leasing funds. So all of these things are fund investments that we've made internationally as part of a diversified pool of assets. So those have done quite well, especially in 2019 in the first half of the year. So when you say 68, that is 18 months of earnings. And I think it's important to separate the two. And the only reason why we spoke about first half of this year is because the annual meeting was happening so late, we felt the need to give the council an update as to what has happened in the first half of 2019. So it's important you separate the two. Now, switching to the theme of the co-investments, what is really the benefits of co-investments? The benefit is the following. Number one is we do not have enough capital to address the opportunities we see. That's fact. And frankly, in the size of Nigeria, $125 million for infrastructure investments is not going to go very far. So the only way we can make sure that works very well for us is to get our people to be part of it. So the first benefit for us is to be able to scale up the investment. The benefit to the co-investors is that the co-investors look at Nigeria, look at places they want to invest in, and they feel more comfortable going alongside with the NSIA in some of these areas. Bear in mind, infrastructure investment is very complicated. So they feel the need to partner with the NSIA, and that's for those who see Nigeria as investable. And quite frankly, we've been very surprised by the level of interest we have received, particularly for co-investments in healthcare, or co-investments in agriculture, and also in gas industrialization. 2018 and 2017 even, we tried to experiment and see how these funds can be structured. So we did a co-investment fund in agriculture with UFF, which is a company that's backed by Old Mutual. Now, for the basic chemical platform, we're also doing a joint venture with OCP, into which now we've seen other people show interest. So the truth is that we have had some experience as to how these funds are designed, and no one single fund is the same. So with that experience behind our belts now, we are willing to now go ahead and try to create a proper structure. So let me recap the benefits. To us, it's about scale. To the co-investors, it's about coming into the country alongside with a partner of choice. And then, quite frankly, one of the things that's given us the confidence to try and do it now is because we've, in a small scale, had some experience. And oh, by the way, let me also mention, one of the early experiences we had also was in the creation of infra credit, which was an NSIA-initiated idea, but we worked with PID, DFID, and Garantco in particular as a technical partner and also the co-guarantor to create infra credit, which is now something that's doing quite well in terms of helping grow the infrastructure market. So we've had some experience. Now we want to launch out as a big theme for it and see how much we can raise to bring people who want to invest in Nigeria, want to invest alongside us, into the sectors that are interesting for us.
The NSIA is involved in some projects, infrastructure projects, that are of interest to Nigerians. The East-West Road, the Lagos-Ibadan Expressway, the Mambila project, and the second Niger Bridge. What is the state of those projects, and what are the specific challenges you have been facing in moving those projects forward, if there have been any problems? And then are there bankable projects that can further generate better returns on investment?
Yes. Well, first of all, these 5 projects you mentioned, East-West Road, Second Niger Bridge, Lagos-Ibadan Expressway, Abuja-Kano, and Mambila, are part of a presidential infrastructure development fund. Now, the federal government injected $650 million into this fund, and the NSI is the manager of those funds. And those funds are responsible for disbursing on these projects. So far, only 3 of those projects have actually come alive in terms of disbursements and construction work. And those are Lagos-Ibadan Expressway, Second Niger Bridge, and Abuja-Kano Highway. We're still doing a lot of preliminary work on East-West Road and Mambila. Those are still in progress. We haven't disbursed any funds on those, nor have we taken responsibility for those projects yet. On Abuja-Kano, and before I even go into specifics, the plan for the Presidential Infrastructure Development Fund is as follows. A little bit of capital from the federal government, some capital from the NSIA, and then the NSIA as a manager will raise capital from third parties. And this is everybody from pension funds, international investors, local investors, anybody who wants to come into those projects and for whom the terms that we're going to offer will be useful or beneficial. They will partner with us. So that is the funding structure. Federal government, NSIA, third party. In 2020, so far it's been the federal government that has been funding it. As we go into 2020, we'll be looking to now create all the co-investment structures around it and inject NSIA's capital and also raise capital from the market and from third parties. Now, to where each of those projects are, they're all at various stages of completion. The important thing is that we've started and we're working very hard to a timetable. All of these projects we're hoping to complete before the end of 2022. There are specific dates and timelines, but as you very well know, infrastructure, investments and development can face all kinds of challenges. We face a couple. For example, Second Niger Bridge, there were issues around community compensation and all of that stuff, which is being dealt with by the Federal Ministry of Works. We need to also explain we did not sign these contracts. There's contracts signed with the Federal Ministry of Works with the contractors. We've come in as financing partners on those projects. So there are some real life issues. I mean, some of the issues also is how do you manage ongoing traffic on a busy road like Lagos-Ibadan Expressway whilst construction work is going on. So there's a lot of challenges, no question about it, on this project. But we are very close to the Ministry of Works and the contractors, the public-private partnership between us and the ministry. And we are hoping that all the timelines set for completion will be attained. 2022 for both Lagos-Ibadan Expressway and Second Niger Bridge. And the first phase of the Lagos Abuja Kano is end of 2021 for completion. Now, all these roads are going to be tolled and there are also all the economic models being developed to make the roads bankable, particularly for NSIA as an investor and for the external parties that we're bringing into this project. So I'll recap by saying, we're all at various stages. I'm sure you've seen the Second Niger Bridge tends to be the one that's very visible to a lot of people. But Abuja Kano, there's work going on there as well. It's a very long road from Abuja to Kaduna to Zaria to Kano. And so work is going on at 3 different points at the same time. And so we aim to try and get this thing to the completion by the end of 2021. Now, let me explain something. These roads have been in the works forever. And I think the Presidential Infrastructure Development Fund initiative, which is to create this fund to attack and complete these roads within a short time frame, is something that needs to be commended. It's not easy. It's complicated. We're going to be looking to raise third-party capital, our own capital, so it's a lot of work involved. But the wonderful thing is that work is going on at pace, and we have no reason at the moment to doubt that we will not complete on time, as has been discussed by Federal Minister of Works. So we'll leave them to speak to those specifics of construction. Our job is to make sure that the financing is arranged and delivered on time. And so it's wonderful to see Second Niger Bridge finally sprouting out. People for a long time doubted if there was anything really going on. By Q1 next year, the bridge goes into decking phase, from what I've been told by the contractors in our last meeting, all parties meeting. So once we start to see getting decked in the first quarter of next year, I think that will give people confidence that work is moving at pace there. Okay. Lagos-Ibadan Expressway, I know I'll stop here maybe because I don't want to go into too many details.
Just as we round up the conversation, thank you actually for this great breakdown. But just as we round up the conversation, we've spoken about the infrastructure fund, we've spoken a bit about the Future Generations Fund. Let's just in a couple seconds tell our viewers about the Stabilization Fund. What exactly is that for?
So the Stabilization Fund, it holds 20% of our assets. And what the Stabilization Fund is designed for is for the federal government, the federation, not the federal government, the federation to draw from in times of economic stress. So that fund is designed to be short-term in nature. We don't invest it in anything complicated or long-term. It's designed to be available within a few days. Actually, we want to be able to write a check if it's called within 7 days. So we only invest in them in liquid monetary instruments, fixed income mostly, where we can sell very quickly and return the capital. It's done well. I think we've had a good performance on it this year. Yeah. So
thank you very much, Orji. Thank you very much. That's all we'll be able to take on this segment of the program. And I'm sure that our viewers have been really well enlightened by your contributions. Thank you.